This is Jordan here at Pure Elliott Wave, and I'm here with an update for you on the XRP market. Laura and Jack are preoccupied this week. They are mourning the loss of her husband Caesar and headed to a funeral and to spread out his ashes in the ocean, as he was an avid surfer. So what a cool way to celebrate his life, and let's keep them in our thoughts as we go through this week. For XRP, though, we are expecting further downward price movement, and that's due to an expanded flat, potentially in this second wave position for minor wave 2. Expanded flats for our Bitcoin and Ethereum analysis are the second most likely corrective structure, just a little less likely than a zigzag. And in terms of the target for the downside, I'd prefer to see this target and this line brought down a little further, potentially to the 1.2 to the 1 area. And that's due to our other statistics in our research paper for a expanded flat coming down in a second wave position. The C to the A wave usually reach the 1.6 to 1.8 ratio, and that would put our C wave target even lower, down to this area here. If we look at the bigger picture, though, this second wave will present a buying opportunity for more cheaper XRP for our longer term investors, and we are still expecting this bull market to rage into the coming years. This may just be a short term pullback, and this fits very well as a 3-wave structure here, a 3-wave structure here for B, and then a 5-wave structure now moving down for C, as flats subdivide, 3 waves, and then 5 waves to the downside. So that makes more sense of all of this choppy price action through the first half of 2025. Now let's shift to the daily wave count, taking off from the top here at minute wave B. With minute wave B complete at the top here, now we're looking for a motive structure here, subdividing as an impulse wave for minute wave C to the downside. Now showing a series of first and second waves at minuet and sub-minuet degree. With this massive move to the downside, this may be a 3rd wave going into a 4th wave. Now if wave 4 invalidates this wave count and goes up into the price territory of wave 1, that may mean that the 3rd wave has not yet come. That's due to wave 4 not being able to move to the price territory of wave 1, and that would be at 2.7280. So we are still expecting some more downward movement. If we saw more overlapping waves, this could be a diagonal. However, those are much rarer. So we have a scenario for either overlapping movement or prices spiking further to the downside. The point at which we would discard this wave count altogether would be if price rose over the top of minute wave B for the long term, or for the shorter term, if price rose over the top of sub-minuet wave 2 here around 3.20, and that would invalidate any structures that we could see moving to the downside. At that point, above 3.20, we would see the short-term bear market to be over. Now let's shift to the technical analysis. I've thrown together the technicals here, courtesy of TradingView. So this is a daily chart on TradingView, and I've left out a few indicators that are not being used now due to ADX now indicating the early stages of a bear trend. So with ADX now indicating that a bear trend is underway, definitely has more room to move to the downside. RSI also showing we have more room to move to the downside, as it just barely met oversold and has pulled back to the neutral territory. As far as the candlesticks go, we had 2 evening star candlestick patterns with an uptrend dojis, and followed by 2 red candlesticks here. So we had double evening doji stars here, and then another evening star here with an uptrend, a detached body followed by a red medium body candlestick, which was met by price tumbling very, very sharply. And it's interesting here because the volume seems to be a little bullish. You can see lower volume on the large down day, and then on the next green day we have even higher volume. But that volume is bearish because with prices making new lows, volume has increased, and it did make some very, very, very sharp new lows. Another bearish sign was price consolidating here. It rose with volume, then it consolidated with decreasing volume. So we had a lot of indecision in this time, and now with price continuing to new lows, increasing volume, this is bearish for the short term. We have very strong resistance right overhead at 2.70 and medium resistance here for close to the all-time highs. We have a few pivots around the 3.45 to 3.65 area on the Bitstamp data. There's also a trend line to note coming from the overhead. We have 2 pivots here and 2 pivots here. So if we start trading over this trend line above $3, that would be bullish for the short term, in my opinion. This bullish lower wick here does look bullish. However, this wick is not at least 2 times the length of the body on this candlestick, which means it's not a bullish reversal pattern. In order for this to be a hammer, we would need that wick to be at least 2 times the length of the body, of which it is not right now. On balance volume had a weak bullish signal, breaking over this line with just the bare minimum of 2 tests. To the downside, we broke this purple line on top with 3 tests, and that led to some downward movement, and we have formed another support area here with 2 tests to the downside. So weak signals in each direction for on balance volume. As I previously mentioned, RSI reached just oversold and is back to neutral, so there's definitely more room to move down. With ADX not pictured on this chart, but now just showing a new bear trend underway. The bearish evidence here and the Elliott wave count expecting at least a few more waves to the downside. We're expecting XRP to continue its downward trajectory unless we see price trading above this $3 area. So that concludes this week's XRP update for everyone with the rapid price movements. Expecting more of a short-term pullback, maybe more of a buying opportunity before the bull market resumes. Let me know if you have any questions in the comments below.